What's up, guys? It's Migs from Market Open. I've been getting a lot of questions from different people and different platforms of mine asking, "Hey, I have $10,000. I want to invest in the stock market, but I don't know how to get started, or what do I do next, or things along that nature." And I wanted to put this out to be able to help out some of those people that don't really know where to start. Okay, so I broke it down into 5 simple steps. Opening up a brokerage account, decide what kind of trader you want to be, depending on how much time you have. Uh, then you have to study, obviously. You have to formulate a plan to be able to get into a single stock, and then you have to execute your plan. Okay, now let's talk about opening up a brokerage account. Now, depending on your account size, will sort of depend on which broker you should go with. These are some of the different brokers that you can go with. SureTrader, E-Trade's been around for a very long time. TradeKing, SpeedTrader, Interactive Brokers, Trade Monster. Now, let's talk about something real fast that's definitely going to be a major barrier for a lot of people coming into the stock market. So there's something called a PDT rule. So the PDT rule only allows you to make 3 trades per 5-day period. So you cannot buy and sell more than 3 times within a 5-day period. So ways to get around that is to have over $25,000 in your account, your trading account. There are different ways that you can go about it. You can go, that is a US rule too. So there's different ways to go about it. What you can do is either have an offshore broker that doesn't, that kind of goes around the PDT rule. So SureTrader is a very popular one. Their brokerage firm is based off the Bahamas, so they do not have to go by those rules. Now, if you go with a company like E-Trade, SpeedTrader, TD Ameritrade, you will have to have over $25,000 in your account to be able to day trade more than 3 times within a 5-day period. Now, there's are other ways to go around it, such as trading for a prop firm. So a firm that basically you give them a little bit of money, they train you, and then they let you use their capital, and they give you over the $25,000 amount to be able to day trade freely. But now the catch is that there is a profit split. So maybe they'll do a 70-30, 80-20, 90-10, depending on how much money they take in from your trades. Now, out of the ones up here, I would definitely recommend TD Ameritrade if you have over $25,000 in your account. Whether you are an investor or a swing trader, it's a pretty good one-stop shop type of broker. But if you have something, or if you have less than $25,000 in your account, you would definitely have to go with SureTrader. E-Trade, I haven't really used them too much, but I don't know very many professionals that use them. SureTrader is based off of the DAS platform, which is basically the standard now. Okay, so now ask yourself, how much time do you have on your hands? Perhaps maybe you work full-time, maybe you work part-time in the mornings, maybe perhaps you're a college student, maybe you're retired, maybe you have all the time in the world and are looking for a new hobby. So day trader kind of requires a lot of time, especially in the mornings, to be able to look at the market, look at the information, and watch everything move. A swing trader sets up their position. Everything is kind of beforehand. You set your entry, your stop, and your profits and everything. You can set that up beforehand. So if you're going into a meeting at 9:30, you can already have everything set up by 9, so you don't even have to worry about it. Now, if you're an investor, this requires the minimal effort. You can just research a company on your own time and then just buy the company whenever you think it's fit for your strategy. So if I was to qualify these as most time, less time, and the least, it would definitely be in this order. So day trading definitely takes up a lot of time. Swing trader you can definitely do with a job, with a part-time job. You can look at your phone throughout the day and just see how the stock is doing. But since all your entry and your stop and your profit taking is already kind of set up ahead of time, you don't really have to do much except for just watch the stock and see where it's going. An investor definitely takes the least amount of effort. You just buy the stock, set a stop, and you're good to go. And you just basically hold it on for however long you want. Okay, so this is probably the longest part and the most ongoing part of the whole journey. So everybody that's in the stock market is always learning. Something's always changing, just like computers, maybe technology or just new methods of doing certain things. The market is forever changing. So different things that you can study are video lessons. You can join a chat room. You can read books. You can definitely go to seminars. Seminars probably being one of the most expensive ones. And I haven't been to too many seminars that are in person because most of the things you can, truthful, it's 2017, you can find most of the things that you want online. Let's be real. Everything is available on YouTube. So I've been to several seminars that are online or that have been put out by different firms, but they're all online. And none of them are in person, or you shouldn't really have to pay for a lot of them. If you're part of a certain group that perhaps they're putting on a certain seminar, then you can plan to attend those to get more one-on-one attention. But other than that, I don't really think it's super important to go to too many seminars. So I think video lessons is probably one of the most important ones because every chat room, every website basically that tries to teach you how to trade the stock market, they all have video lessons, and let's be real, it's probably the easiest way to learn. Everybody is mostly a visual learner when it comes to certain patterns and way that the market moves. It's a lot easier to see the charts than just to read it on a book. Chat rooms, you definitely get a lot of one-on-one attention with your mentor, and you get all your questions answered. So I highly recommend you being part of a chat room. You just have to find somebody whose strategy is profitable and whose style you think it will fit. Now, books. There are a lot of books out there that you can read. One of my favorite ones being this one from my mentor, Mayor Barack, The Market Whisperer. It is a phenomenal book. It is a hefty read, I will tell you that. It's over 500 pages, but it's definitely worth it. But yeah, something that I wanted to highlight right here is make sure that it is a profitable strategy. If I had a nickel for every other guru or mentor out there that says, oh, my strategy is the best, you can make this much money, blah, 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 but they do not provide information that basically backs it up. They've been doing it for a couple of months, and maybe they've just built up some sort of network, or they had a bunch of YouTube or Twitter followers or something like that, and they just throw out a course and people just eat that sort of stuff up. It happens all the time. It's very unfortunate too, though, but it does happen a lot. You just got to find somebody that is a legit professional, very legitimate professional that's been doing this for a very long time. And one of my criteria, something that might help you out as well, that makes a lot of money. Somebody that you can look up to and be like, I want to be like that guy. I want to make that much money. I want to have that sort of lifestyle that he has. It might not necessarily be about the money, but maybe it's just the time that he trades. Maybe he trades the market open, and he's able to have the rest of the afternoons or have that lifestyle that we are all behind. Now, this is the strategizing part. This is after you've done the studying. You have to form some sort of attack. So let's just say that you are a swing trader, right? And you need to set your entry, your stop, and you need to know exactly where your partial is. So, for example, let's just say that you want to get into this pharmaceutical company when it hits $20. So $20 would be your entry stop. You would put a stop loss under $19, and you would take a partial at $21 or $22. Doesn't really matter. So that is what it's like having a plan before you go into a stock. So failing to prepare is preparing to fail. I've heard that so many times. If you step into the stock market without being prepared and having knowledge behind you to back it up, you're definitely most likely going to fall on your face. Yeah, you might get lucky here and there when you jump into something without even thinking about it twice. You just go ahead and buy. It might work, but 7 out of 10 times you're most likely going to fail. If you're an investor, this is one of the more popular sites. So Yahoo Finance, as old as Yahoo is and it's not really talked about really that much. I don't really use Yahoo too much except for the finance section of it. I think that finance section of it is very good. You're able to look up all the news, market caps, all the past history on the company, and you're able to come up with a good hypothesis on why you should invest in this company. Two other websites that I use are stockcharts.com. If you're looking at a daily chart, it gives you a good 6-month overview of the company. Now finviz.com. Finviz.com is a good screener website. So if you're like a swing trader and you're looking for certain stocks, maybe within a certain price range, depending on how much money you have, you can look up the companies on Finviz, make sure that they fit your criteria. Then you can turn around and go to stockcharts.com, make sure that the pattern is correct, and you formulate your plan. If you're a day trader, I would definitely recommend studying all the patterns that you can and finding out which ones are profitable for you, and then collecting all that data and seeing which ones fits you best, and pick your very, very best patterns that you have all of your confidence in, and stick with those patterns because those patterns will be very profitable for you. Now execute your plan. So let's say that you have your brokerage firm opened up and you've done all the studying and it's time to start doing it. So for whichever reason that you've started trading in the stock market, perhaps it's to spend more time with your family, or maybe you own a real estate business on the side, or you just want more time to be able to enjoy the things that you want to do. Maybe you want to go hiking or fishing or visit some of the beautiful places that this world has to offer, but unfortunately you're tied down to a 9 to 5. The stock market definitely has a lot of benefits, and to be able to do and kind of free up your life and live it the way that you want to, instead of you having to be a slave to somebody else and making somebody else a lot of money. So I tell a lot of people, if they're not really happy with their job, if they're not happy with working a 9 to 5, well then perhaps it's time to change up your career and take a look at something else that you might enjoy. Because honestly, I wake up jittery still every single Monday because I'm so excited that the market is open. If you guys like the content that I've provided for you on this video, make sure to subscribe and look out for further content that I put out. And also, if you have any questions, make sure to leave them down in the comment below, and I'll talk to you guys next time.